Okay, we're on.
Good morning, Mike. Mike, you there? You hear me? Good morning, Mike.
Morning, Carl. How you doing?
I'm doing great. How are you?
Good to see you today.
Yeah, it's been an interesting week all over the place. So how are you doing?
I'm doing great. I'm doing great. Yeah, it's been a busy week, that's for sure.
That's good.
I gotta, I'll tell you what I got going. I put together a networking and team building class, and there's a platform out there called mastermind.com. It's Tony Robbins' deal, and I've been trying to launch it, and my technology is a little slow at best. So I'm hoping I finally was talking to somebody this morning online who kind of gave me some steps, and I went back and followed some steps. I think I should be able to get this thing launched this afternoon. It'll be interesting though.
Yeah.
So, but and I only bring that up because I think one of the key things is that in what we do, I don't care if you're in real estate or life in general, but networking and team building is so critical and it's important. So,
Yeah. Well, let's talk about that a little bit later. But let's go ahead and welcome the people that are with us today. Thanks for coming, spending some time with us on this on your weekend, and then those that are listening. This is Multifamily Unplugged, where Mike and I get together every Saturday morning, 10 o'clock Central Standard Time, and we talk about what's going on in the multifamily space. And our goal is really, as you mentioned, Mike, to build a community. Build a community of people that are all like-minded, that are interested in building residual cash flow and long-term wealth in multifamily, like you and I have done, over the years. So, and the goal is to make this, the number one Zoom radio show out there. So, I think we're what, episode number 4 that we've been doing it in this format.
yep, that's for sure. And no fake news here.
Yeah, exactly. Right. No fake news. Exactly. But no, but again, we talk about weekly stuff, and then we just have a conversation, and we make our, what we've learned over the years available to people that are interested in finding out about multifamily. So, why don't you go ahead and introduce yourself real quickly for those of you that may not know you. Some of the people, obviously listening, they do know you, but just real quickly, and then I'll do the same.
Sure. I'm Mike. I'm Mike Morowski, the founder of mycoreintentions.com. We're a training and coaching platform. Basically, what I've done is I've taken 30 years of experience in the real estate space, everything from selling residential real estate to owning and operating thousands of multifamily units, building and selling a couple of different companies along the way, all dealing with property management and multifamily properties, to spending hundreds of thousands of dollars on an annual basis for training and seminars and books and tapes. And I've taken all that information and taken all of that knowledge and put it on a platform that I coach and train other people. And my big thing, Carl, is that I think in the real estate space, we can get so stressed out, so stretched, and our time becomes so thin that I want to work with people and help them to live a better quality lifestyle, a little bit more balanced, spend more time on things that matter most.
Yeah, no, that's great, and I
So,
understand that. Yeah, since I've known you, I know that's what you're all about. So thanks, and I love what you always say: success leaves clues, right? So,
yeah.
if you keep your eyes open and your ears open, and your mind open, you'll see the clues that other successful people leave for you. So that's awesome. And for me, for those of you that don't know me, I go by C. Gordon Moose. My name's Carl Gordon Moose. I was in real estate. My father owned property, and so my brother and I used to tag along when we were kids. And then I got into banking, and it was apartment lending and commercial lending. And I saw a lot of people that started with nothing over the course of 8 or 9 years while I was in banking build portfolios and build small fortunes. And so I finally jumped in and started buying multifamily property myself. And I made a ton of mistakes. I mean, I made a lot of mistakes. And eventually I graduated from that. And I look back and realized that when I was focused, I was more successful. When I was less focused, I was less successful. So I've now put a program together called Find Your Focus, 10x Focus, Mega Max Personal Productivity. So, between the two of us, that's what we're really having conversations about, how to focus and how in the multifamily space and how to build that residual cash flow and long-term wealth, because you and I both know it can be done, right? And for those of you that are just starting out, whether you listen to this show and follow Mike and I or follow somebody else, it's just like you say, success leaves clues. So follow somebody that's been successful and pick up the clues. So awesome. Well, so let's talk about current events.
Okay, good.
Can we do that? So
Yeah.
what I did, I don't know what you read, but I read something interesting today or the other day about the stock market. If anybody's following the stock market, it's going up and down, but in general, it's going up. So this particular article talked about 401ks, and it caught my attention because most of the deals that we did, and we bought about 22 apartment buildings. I didn't put a nickel of my own money into any of them. And we went out and we put LLCs together for each asset. So we call it single asset LLC.
Hmm.
And we brought on partners, and probably I would say 70 to 80% of the partners they brought their money from their 401k, right? And a lot of people don't realize that there are trillions of dollars locked up in 401k accounts, these self-directed IRAs. And most people think that their only option in self-direction is buying stocks or bonds or mutual funds. And the reality is, as you know, Mike, that's not true. You can use your 401k to lend money to buy equities, to buy equipment, to buy real estate. And a lot of people don't know that, because when the ERISA laws came out, Wall Street really, really, they really picked up the ball and ran with it and said, oh yeah, self-directed IRAs, buy stocks, buy bonds. The real estate people really didn't do a good job explaining to people you can also buy real estate. So what's my point? My point is, if you don't have money yourself and you're looking to leverage other people's money, people with 401ks are a great resource, because they can actually partner with you and use their 401k money, and any returns that go back to their account are supercharged. They go back tax-free. Now, I just want to say something real quickly. Neither Mike or I are attorneys, and we're not accountants. And we're not fiduciaries for 401k. So, this is just our opinion and our experience. However, if you're going to take that path, you definitely want to get professional advice from an attorney, an accountant, or a 401k administrator. So, and Mike, I know you probably use 401k money too as well, right?
Yeah, I used a lot of 401k money. And what I want to say is you can't just use a traditional 401k or a traditional IRA. It has to be self-directed. And there's a process that you go through as a investor that is you get together with a self-directed administrator, and he will help you do a rollover. Like Carl said, we're not accountants, we're not attorneys, we're not even self-directed administrators. However, we do have a lot of experience. And I will say that there's a number of people that have old 401ks, old IRAs sitting out there from jobs they had years ago that they're just sitting there and they've never done anything with or don't know what to do with them. And by helping somebody roll that money over into something different. And I like what you really said, because the money that you earn in those, you earn tax-free. So you could take that money out in 20 years from now and you're not paying taxes on it. So
Yeah, and so what we did was, we would have partner, we'd set up an LLC which had members, right? Which is different than a corporation. A corporation has shareholders, a limited partner has partners, an LLC has members. So we would produce a K1 every year for our members, and any of those, any of the cash flow from the property went back into the 401k, was tax free. And as you said, there's trillions and trillions of dollars sitting out there. Now, our listeners may not have a 401k themselves, but they may have a brother that does, or a brother-in-law, or a cousin, or maybe a college, somebody they go to church with, or somebody they, I played hockey, maybe somebody in their hockey network or their soccer network or their golf network. My point is, what we were talking about last week, right? Talking to people, letting people know what you're up to. And it could be a simple conversation. It's like, hey, who do you know that's got money locked up in a 401k that's not real happy with the returns. Because this is what I do know. Most of the 401k returns, after you pay fees and everything, are pretty low digit. I mean, low single digit. I mean, they're not very sexy or very attractive. They're, 2, 3, 1, 2, 3, 4%. And a lot of people are like, oh my God, that money's locked up until I'm 65 years old. It's not making me any money on a return basis. Where, if you could get 7, 8, 9, 10, or low double digit returns from a real estate investment, everybody that we talked to about that was extremely excited, because it was significantly more than what they were getting on a performance basis. And again, the key thing was it goes back tax free. So again, the reason I bring it up is because the stock market, a lot of these accounts have gotten better or improved or increased. And it's just something to consider. If you're thinking about buying real estate, you don't have your own money, it is a resource that professional real estate investors leverage, because there's trillions of dollars out there.
Yeah, and so there's a couple of things that I want to say, and the first thing I just kind of want to um, make a point that I'm not. I believe today in every portfolio you need to have money in different places. So a well-balanced portfolio is to have some alternative investments. Your alternative investments will look like real estate, gas and oil, maybe some artwork, things like that. But then your traditional investments, stock market, right? So if you look at the stock market traditionally over the last 50 years, it has gone up, even in the midst of the dips. The reason people lose money in the stock market is because when it goes down, they panic and they pull their money out, which causes it to go down. And traditionally, I'm reading a book right now that's just really a great book, written by Tony Robbins, and it's called Unstoppable. And it is talks about this, and he has interviewed 7 of the top investment people in the world, right? Warren Buffett and uh, Peter Maluk and, a number of them, and come together with this concept and ideas and really the historical data that shows that, hey, put your money in the market and stay there. But I think a percentage of our money should be there. So that's one side. The other side is if you go to your traditional stock market guy or the person who's holding your portfolio or financial planner and say, hey, I want to do some alternative investments, they really don't get it. That's why the power of the self-directed IRA is there, because if you have a portion of your money in that self-directed, now you can control your own destiny. You can make your own choices. You can make your own decisions because you understand that alternative investment. You can do that research and go in that direction.
And a lot of people don't know that. I mean, we would have conversations literally, Mike. I would tell people, yeah, we got this building under contract. We're looking for 100,000 or 150,000 or whatever, whatever it was. And, I would just say to people, hey, who do you know that's got 401k money, that's been working at Motorola or Allstate Insurance or some company for a period of time, and they've got some money locked up in 401k. And you'd be surprised. People would say, you know what, I don't, but my brother's been working at Motorola for 22 years. I said, he's probably got a ton of money in his self-directed IRA, and he probably doesn't know that he can actually do something with it. And they put me in touch, or a friend of mine at Intel, 17 years at Intel, right? He's got millions of dollars in his 401k with, he's like, yeah, I get a 2% return on my money. I'm like, well, that's ridiculous. So, again, and Mike and I are not giving you, we're not qualified or licensed to give you, financial planning advice or any of that type of stuff. All we're doing is sharing our experiences. And, again, putting that out there, it is a way that if you don't have a pile of money yourself and you want to do the legwork and bring, because we talked about that last week, right? What value do you bring? Well, money is only one value. And by the way, me personally, I think, I value money in a deal far less than the deal itself. If you go out and find the deal and you put it together, you analyze it, you find the back end financing, and you figure all that out, that has far more value than just somebody bringing money. Because there's lots of money out there. And you and I have said it many times, Mike, good money doesn't chase deals. I mean, good deals don't chase money. Money chases good deals. So if you go
Right.
out and do the legwork and find the deal, you'll find the money. And if you tell people about it, they're and you just mentioned who has a self-directed 401k, you'd be surprised what people tell you.
Absolutely. So, and I just want to remind our listeners, if you have a question, throw it in the chat if you're online with us, and we'll try and get it answered for you. We do have a question, and what this listener is asking is, what about the UBIT tax? Does it depend on the business structure, like a solo 401 versus an LLC? Again, we're not qualified for these types of questions. Here's what I know: a lot of it depends on the loan structure, your involvement, how you've been conveyed the ownership. Is it through a partnership, a limited partnership, an LLC? So there's a lot of different things that go into that. In this type of an investment, generally, if you're in a passive investment where you are a passive investor investing in a syndication, you're going to get a K1 at the end. If you do a self-directed hands-on investment, you have to be a good arm's length away from that transaction. It can't be a piece of real estate used for personal use. So there has to be non-recourse loans and a number of other things that are involved that I think will help short cycle the UBIT and those questions like that. So what you want to do is you want to go to an administrator, self-directed administrator, and talk to them about the structure and how it actually works. So
Yeah, and exactly. And those people, we Entrust is a big company. There's a whole bunch, Fidelity, and they have what's called fiduciaries or administrators, and they can answer all those questions for you. And again, you brought that up, Mike. That's a very good point. Passive versus active. Typically, if you're passive, say for example, you have a deal, Mike, and you come to me and I say, I've got $1 million in my 401k. I want to take 200,000, 20% of it, and lend it to you or participate in your deal. But
right,
I'm
right,
going to
right.
have nothing to do with your deal. I'm not going to be. I'm not a managing member. I'm not a general partner. I'm not going to be operating the building, collecting rents. It's totally passive. Then it goes into a totally different realm. And again, Mike and I are just talking about our experience. You really want to do your own research and talk to professionals in that field, because they can tell you everything. They can tell you the do's and don'ts for
Yeah.
sure.
And here's what I know for sure is that a passive investor using a self-directed really gains a lot of benefit. And that benefit is the ability to partake in a real estate deal, not have to get their hands dirty, and receive uh, a cash flow and build long-term wealth. And that's really what we talk about, Carl. That's really what we want our listeners and coaching clients to understand is that, hey, how do we help you to build short-term cash flow and long-term wealth and get you out of the rat race?
Yeah.
That's what it's about.
Yeah. And you and I both know that it's possible because, and I've said this before, Mike, 90%, if not more, of the people that I dealt with in my banking, buying, selling buildings, whatever, started with one building. Listen, I know a guy here in Chicago. I used to play hockey with him. He sold his portfolio after about 22 years for 75 million to American Invesco, right? He started with 1 3 flat while he was at UIC. He and his buddies bought 1 3 flat on the west side of Chicago, and he built over a 22-year period while he was still in college. No money. He was from Montreal, as a matter of fact, and I played hockey with him. My point is, unless you inherit a portfolio from your rich uncle or your parents, most 90 isn't that true though? Like
Yeah,
95%
yeah.
of people start with one property, and then you learn, you make your mistakes because you're going to make mistakes, right? You make mistakes, and then you get a little bit of experience, or you connect with somebody, either as a partner or as a mentor or a guide or a trainer, coach, whatever you want to call them, that you can get some of their experience. Because this is what I know. When you work with people, Mike, you don't let them make the same mistakes that you made. They're going to make their own mistakes, but you can see the red flags and the black holes and the pitfalls. Um, ahead of them because you've been there.
Right. So here's something interesting, and I have to laugh when you talk about inheriting a portfolio from your rich uncle, right? What I found when I was building property management companies, and both times that I was building a property management company, whether it was on the commercial side or it was on the residential side, the clients that appear that are that inherit property are interesting, are an interesting client. And here's why: because all of a sudden somebody passes away and they wind up with this piece of real estate and they have no clue what to do. What do I do with it? How do I, I can't sell it. If I sell it, there's all these capital gains. What do I do with it? And those are the best clients for a property manager in the world, because what you can do is you can help those people realize their gains that are involved in that inheritance.
Yeah. Well, and that situation happens. Listen, we bought a couple of buildings from that. We networked with a state attorney, right? And he was a friend of mine, and he would find out who passed away. I mean, that was his business. And he, when someone passed away, a lot of times people, the kids move to from Chicago, say for example, to Arizona or California,
right,
or somewhere else, and then the parents pass away, right? And they own 2 or 3 of these 6 or 8 flats. And now the kids are like, what the heck do I do with this, right? Or, there may be multiple heirs. Well, the attorney is the one that has to sort that out. So, he would say, well, you should give my friend a call. And I'd get a call. Hey, we have, my dad, I didn't even know this, but my dad was a janitor and he bought 3 buildings, seriously.
Yeah.
And I'd say, well, what do you want out of them? Well, if we could get, 250,000 each, great, and we'd look at it, and, if it was a good deal, we'd figure it out and we'd buy a little portfolio of buildings. We did that a number of times.
Yeah. Yeah.
So,
as
things, thinking outside the box, right?
Yeah. As a real estate agent, I always tried to buy my best listing once a quarter. So I'd have, a number of listings on the market, and I always tried to buy the best one once a quarter. And that's a loaded conversation, right? What's the best one mean? Well, it could be one that an investor had on the market. It could be one that somebody inherited. It could be one that somebody couldn't sell and needed to sell because they needed to move. There were a number of different variables that went into that conversation. But that's how you start to build a portfolio, right? If you're a real estate sales professional and you can buy your best listing, if you're an investor and you are actively in the marketplace looking to locate and source deals, there's a number of ways to find off-market properties. There's companies out there, and a friend of mine owns a company that is a probate company, right? And what they do is they circulate probate leads from all over the country. And, that's a great opportunity. If you have a relationship with a probate attorney, if you have a relationship at the courthouse, you can start to find these properties that are in probate that people have that they can't figure out how to get out of. And if you can solve a problem, an investor's best scenario is to find someone with a problem and solve the problem for them, right? We call those people don't wanters in the marketplace. So if we can solve an issue or solve a problem for somebody who has a piece of real estate who doesn't want it anymore, you've just bought yourself a piece of real estate that can be productive.
Yeah. Hey, is that who's going to be our guest next week? That gentleman from the probate?
No, that great question though. We're going to have a guest next week. There'll be a first time on our show, and his name is Lamel McMorris. Lamel is right. He's a developer, and he's an interesting guy because he doesn't like to be called a developer. But what he's doing in the city of Chicago, and if you're not familiar with Chicago, there's a neighborhood called Inglewood. And Lamel is single-handedly trying to redevelop the neighborhood and turn the neighborhood around. It's been blighted for years, and he is actively in there. So he'll talk to us about a bunch of opportunity and all kinds of things going on there and his history. And very interesting. It'll be a very interesting conversation next week. So.
And that's next week at the same time, right? On this
yeah.
show. Well,
Right.
that's interesting. Yeah, I'm sorry, I forgot. I owned a couple buildings in Inglewood, so he's going to know the buildings I own. That's awesome. Yeah, that'll be an interesting conversation because we can talk about that. But I just want to go back to what you said, Mike, because while you were talking about that, something came to mind. Listen, for those of you that are just getting started, right? What Mike said was just a golden nugget, what he just said about finding a realtor. If you have a friend who's a realtor, who's active, they are going to find deals. Here's what I would do. Here's a suggestion. Just take it for what it's worth. Call that person up and say, listen, I want to have a cup of coffee. I want to buy a cup of coffee. I want to sit down and talk to you about buying your best deal every quarter, right? Buying your best deal every quarter. And you could sit down with them and say, listen, I want to get into small multifamily, two, four, sixes. I want to partner with you so that when you find the deal, you and I can partner and put together some investors and buy that deal. Because here's what went into my mind, Mike. There's an old saying, right? Brokers go broke. Brokers go broke. When I was a broker, it was embarrassing to me that I'm brokering all these deals, and the only piece of property I owned was my condo, right? And I'm brokering incredible buildings. I'm watching these guys buy these buildings, and I don't mean guys, I mean people, investors buy
Right.
these buildings, right? And it was embarrassing when people would say, well, how many buildings do you own? I'd say, well, I don't have any. And someone told me one time, brokers go broke, right? What's my point? My point is these brokers who are active see all these good deals, and they may not have executed on anything because either they're in the rat race, as you said, or they don't think they have the resources. So you could go to them and say, I want to talk to you about, let's buy your best deal every quarter, or maybe we'll do it twice a year. We'll buy 2 properties in the next 12 months. You'll find them, you'll analyze them, we'll partner up, and we'll take down a couple of properties. That would be a great strategy if you didn't know where to start, because again, that person has a network. That person's going to see deals. They know bankers, they know title people, they know attorneys, they probably know investors, and they might go, yeah, all right. And if they don't, you could say, okay, and call the next one, right? I mean, that's just a suggestion, but I think that's just a gold nugget you just gave away there.
Yeah, absolutely. And I had a couple of people ask in the chat, can I get information on that probate company? And I said, I'll get it to them this week. You know, I'll talk to my buddy Jim and put people in touch with them. But here's the thing, and I really want to reiterate this. A lot of times what people will do as investors, as real estate professionals, is they get too scattered. I've always believed in the philosophy, have a number of lines in the water, because the more lines you have in the water, the more fish you're going to catch. But the caveat around that is to stay focused on each line. Don't put one line in and go do another one. Stay focused on something for a period of time. So if you're currently sourcing off-market deals on a direct mail campaign in a specific neighborhood, don't stop doing that, because you don't see results for a period of time. So make sure that you continue doing that before you jump into something else. But if you go into probate, or you start going out and building relationships with probate attorneys or divorce attorneys, make sure you stay focused on that. When the season's right, we'll yield those rewards. So it takes a bit of time in order for those rewards to finally yield themselves, right? But if we plant enough seeds, ultimately we'll yield some rewards from them.
Yeah, I think that's good advice. And and that's what I talk to people about, because from the mindset standpoint, focus. And in the context of what we're doing, Mike, I think the focus is multifamily, right? So, your analogy, and correct me if I'm wrong, but the way I read into what you just said was, you're going to have multiple lines in the water, right? You're going to have a line talking to maybe somebody that's probate with regard to multifamily. You might have somebody, a line in the water talking about maybe becoming an investor with regard to multifamily, right? You might be talking to a realtor. That's another line, figuratively a line that's talking about finding multifamily. So think of multifamily as the pond, right? That's like the pond that you're fishing in, right? And you're going after multifamily because that's a multifamily pond, right? So you're going to have multiple lines in the water, but you're all in the same pond, right? You're looking at multifamily. So I think someone maybe put a question in the chat. Did you notice that? I thought I saw one pop up.
Uh, um, Nope, that's it.
Nope.
We're done. Yeah.
Oh,
Oh,
okay.
do you mail or try to contact? Do you mail or try to contact tired landlords? That's an interesting comment.
Well,
Tired landlord.
yeah,
How do we distinguish a tired landlord, or where you know um, I think it's an interesting topic for conversation, really.
yeah,
So yes, I think it's a great idea, first of all. And, if we find, and here, I think one of the best sources for off market deals. Okay. So let's go back to this, right? Let's say we're focused on 2 to 4 unit buildings, right? And our philosophy is 2, 4, 6, right, Carl?
yep,
So let's say we're focused in the residential market on 2 to 4 unit properties. What I want to do now is I want my clients who I'm teaching how to go to that next level to go to the courthouse, to talk to the woman or the man in the assessor's office and fill out a Freedom of Information Act and say, I am looking for any 2 to 4 unit properties in this zip code, in this mapped out area between, you know, this street and this street and this street and this street. However you find that information. Then what I want is I want any owners who own those buildings. And then what I'm going to do is I'm going to take that list that comes to me on an Excel spreadsheet, and I'm going to go down that list and I'm going to find where the tax bill's being mailed to. So if I have a property in Chicago that I'm looking at, but the tax bill's being mailed to Florida, I know that that's an unowner occupied property. I want to market unowner occupied properties, and I want to market those regularly all the time. So every 30 days, I'm going to send somebody a postcard or a letter that says, hey, I'm interested in buying a property in the neighborhood that your building is in. If you're thinking of selling, please give me a call. So that's it. Doesn't have to be any more complicated than that. You stay on that for regularly. You'll be surprised at what you'll start getting. One of the things I used to do, Carl, is remember the old bandit signs? And
yeah,
you still see them today, right? Maybe the yellow sign or the red and white sign that says, I buy houses for cash. Here's an 800 number. I did those all the time. We would do, probably 500 of those every 2 months, maybe once a quarter. And we'd stick them, we'd had a company or a runner that would go out and stick them on the corners on Friday, and the phone would ring all weekend. So we would field these calls, and that's the same thing with this direct mail. Here's what happens, right? That seller might not call you today, but be assured of this, that he threw that note that he got from you in the drawer, in the junk drawer in the kitchen where they keep all the pencils and all the paper clips and all that kind of little stuff, right? It's sitting in there because when he gets ready to go sell that building, what she does is she'll pick up the phone and she's going to call somebody on that letter. So it boils down to the fact of repetition, branding, building your service, and then all of a sudden somebody will call.
yeah. And I think that's really important, Mike, because remember, if you're serious about this and not going to do this as a hobby, it is a business, and like everything else, it's going to, the curve is going to be a little bit steeper in the beginning before you start to get some traction. Just like anything else, if you're going to go open a coffee shop or a yogurt shop or whatever, you're going to have to invest some of your time and energy ahead of time to produce results. And I think you're right. I think what a lot of people do, Mike, is they get discouraged. They don't get that immediate gratification. And I always tell people, plan out for 6 months, right? And just continuously pound it for 6 months. Give yourself a 6 month runway, right? Because you never know. You might get 5 months down the road, right? And I fly planes. I don't know if anybody flies planes. Listen, you start from zero and you get 80% down the runway. Your wheels are still on the runway, and then you finally hit a velocity, VR, which is where you roll, and then you take off, right? Well, you don't take off in the first third of the runway, right? So you got to give yourself enough runway to build enough velocity for something to happen. And so that's excellent advice that you just gave. And that's one strategy, right? What we used to do, Mike, is we used to figure out what neighborhood we wanted. Like you said, which streets, right? North, south, east, west. And then I would go on a Saturday morning with a pad of paper and a pen and my camera, and I would go and take photographs, because in Chicago, any building 6 units or more has to have a plaque on the corner of the building that says the manager's name, the company, the address, and the phone number, right? And a lot of times they put the website on there because that's for emergency services, first responders. So if the police or the fire department gets there, they know who to call, right? So I
Right.
used to take a picture of that. I'd literally drive around and take pictures of that, and then I would download it or put it on an Excel, and I'd either call them or email them or send them a thing and said, "Hey, I saw this building in the Gresham neighborhood or the Inglewood neighborhood, whatever neighborhood, because I was working a neighborhood." And I'd say, that's the type of building that we buy. I'd be interested in talking to you about that. Now, there was no for sale sign on that building, right? There was no, 90% of the time people would not respond, but that 1 out of 10 times people would say, "You know what? Yeah, I am interested in selling. Great. Why don't we talk about that?" And here's the kicker. Now you're not dealing with a broker. You're dealing directly with the owner, right? So you can take out the commissions because you're not paying 4% on $1 million property. That's 40
Right.
grand, right? That's 40,000 right there. And you're dealing directly with somebody that may not really know the real market value of the property. And that's when you can come in and cut a deal. So again, just another strategy that's not cold calling, or another strategy that's not going to the MLS. Because the reality is, my experience, Mike, and I'm sure you can appreciate this, you're not going to find deals on the MLS.
Right.
Right?
So let me interject here. Somebody asked a question: how can we find motivated sellers without cold calling? I feel like the return on investment is low with this strategy. What are your thoughts? Well, Carl, you're going to know this story, okay? Because you know my history. But I'm going to talk about cold calling for a minute. So when I first went in the real estate business, that's all I did was cold call. And I could tell you my numbers, and I believe that every good business knows their numbers in the marketplace, right? So I could tell you that I made $8 every time I picked the telephone up and dialed it. I dialed 20,000 dials per year to list 240 properties and sell 125. So I could tell you my numbers right down to the minute. But what we have to do in the real estate business is we have to um, uh, be able to um, master the boredom, right? The repetitious boredom. And that's what cold calling is. It's repetitious boredom. And you might think that it is a low probability of return, or you might think that it takes a long time. But I could tell you what, over time, remember at the beginning of this call, we talked about the stock market, and I made the comment that over the long haul, the stock market made money. You made money, your investments went up in the stock market, but reason people lose money is because they pull out. It's the same thing with prospecting. It's the same thing with direct mail. It's the same thing with going after probate leads, is that people stop, just before you're ready to reach some success. So I suggest to people, stay on the course. Do a little of everything and do it every day, over and over and over again. Master the repetitious boredom. That's what's going to help you be successful. So if you're calling people, so I always am of the thought that we need to put multiple techniques together. So let's go back to the mailing program. If I'm mailing you, Carl, every month, and you live in Florida and you have a building in Chicago, and I'm mailing you every month, and you're not ready to sell, and we go by, but every third month I pick up the phone and call you, or twice a year I pick up the phone and call you and say, "Hey, Carl, how you doing? I know that I've been sending some information out to you. Any thoughts of selling your building yet?" One of these days, you're going to say yes.
Right.
And you know what? If my profit on that building is $40,000, $50,000, then it was worth how many phone calls and how many pieces of mail that I send out.
Yeah.
So you have to weigh the odds, right? And you have to take a look at how do you measure success in what arena.
Yeah, and picking a strategy, you know what I mean? And that's one of the keys. I guess the point I think that we're both making is there's multiple strategies. There's
Yeah.
multiple strategies, whether it's more grassroots like me, getting in your car and driving around, or doing a mailing campaign, or cold calling. So, and everybody has a different resource with regard to time. Some people might, may have more time than others. And there was a question that came up. I saw, if you find a property and it's listed,
Hmm.
can you call the owner direct? Well, the answer to that question is yes. I mean, assuming you're not a licensed realtor. The problem is that if the owner has a listing agreement with the realtor, then they're obligated contractually to pay some commission. You're not going to cut a broker out. The owner's not going to cut a broker out because they have a contract. But there's nothing as a seller. You can absolutely call the owner directly yourself, or knock on their door, or whatever. If you don't have a contract with a broker or an agent, then you're not doing anything wrong at all.
Yeah, and like you said, if you're not licensed, because that becomes a big issue if you're licensed, right? Not only do you cross legal boundaries there, but you also cross ethical boundaries, and you just have to be careful of that.
Yeah, right. So listen, Mike, I know we're getting a little long on time. I want to just put this out there. For those of you that know, we're doing, as you can see in the background here, we've got this multifamily global summit. This is coming up in October, and we've got about 20 speakers. It's going to be a phenomenal event, and right now we're in the early bird stage. So for any of you that are interested, shoot us an email. Put your email in the chat box, and we'll get you some information about this. Tickets, full price tickets for the Facebook group. It's a 3-day event. It's $9. I'm talking about $9, and you're going to get access to 20 speakers. And there's a whole bunch of really great stuff. What we'd like to do is just get you some information about that. And Mike approached me about 3 months ago and said, I really want to do this. I want to bring all my, a lot of my resources together, speakers. And he asked me to co-host it with him and organize it, because I come at it from a mindset standpoint. Mike comes at it from a multifamily building wealth perspective. And we'd really like to invite you. So put your email, if we don't have your email already, put your email in the chat and we'll send you some information about that.
And let me, I think I could play the video real quick. I don't know how the sound will be,
If
but
you got the video, that'd be great.
Yeah, let me play the video real quick and let people see what we're doing.
Mike's going to try to share his screen. Oh, here we go. Yeah, that was awesome. It was a little slow. I think that's because of Zoom. So we can send you that video, but it's going to be a phenomenal event.
Was it slow?
Yeah, it was a little slow, but I think that's because of Zoom.
Okay.
Yeah, I think it's because of Zoom, but yeah, I mean, I'm very excited about it, and we're only 40 days out. I mean, literally, it's like 6 weeks from now, Mike.
Yeah.
Yeah. So any final thoughts? We're getting close to the, we got about 3 minutes left before 45 minutes. Any final thoughts or final questions from anybody? Yeah, it's,
I got one. What are you doing today?
I was going to go take my kids to a movie, but I realized movie theaters are still closed.
That's why I asked you. I know. Isn't it crazy already? It's like, come on.
Well, something we should talk about next week or the week after, because next week we're talking about we have a guest, but we should talk about what's the market outlook moving into the fall, because everything that's happened up to this point is going to have an impact, and there's going to be people that literally make fortunes in the multifamily space.
Yeah.
Because of what's happening. So maybe not next week, but the week after, we should talk about that, Mike.
Yeah, I think that's a great point for a couple of weeks from now. There's a lot of different opinions and everybody's got a different thought process, right? Where we're going to be. I've talked to guys who said, listen, in 6 months from now, we're going to see the real effect of what's happened. After the election, this is all going to change, so there's a number of thoughts around all this. I talked to a guy this week. Actually, I did a podcast and recorded a guy that will be on in a couple of weeks, but he said that he had the best July of his life. He'd been in the business 20 years, and he's had the best July he's had in 20 years collecting rents. So it's amazing to me that where the world is and people being kind of gun shy about some things, and you're having your best collection month ever in the midst of this. So I think there's two sides of the world here that we need to look at and talk through, because I certainly don't have the right answer. I certainly have no idea what's going to happen. And I wish I had a crystal ball, because we could all make a fortune at that point. Right. But, so it's going to be a matter of what does happen here.
Yeah. Well, and also getting yourself into a position, right? I mean, it's like buying insurance. You don't want to buy insurance when the building's on fire, right? So it's getting yourself in a position, because there are going to be some shakeups, coming the fourth quarter. And being in a position to take advantage, and I don't like to use that word "take advantage" because it has a negative connotation, but really being in a position to capitalize. And again, sometimes that word has a negative connotation, but capitalize or take advantage from the perspective of there's going to be people that want to bail out, and if they want to bail out, there's nothing wrong with you being there to catch the property while they're bailing out. I mean, there's nothing wrong with that whatsoever. So.
Right, for sure.
So take us home, Mike. What are our final thoughts?
I think for final thoughts, that if you are new in the investment space, keep learning, keep educating yourself, become a sponge, absorb as much as you possibly can. I always talk about the rubber band strategy, right? The more you stretch a rubber band, the elasticity never goes back to it. It never goes back to its original shape. So keep stretching yourself, keep learning, and execute. I think execution is really important. And if you are not executing on your own, then get a coach and let a coach help set a plan for you and help you to execute that plan, because growth is what we all need. I mean, I even have a coach today still, right after 20 years, and I'm still being coached by two different people on two different things in my life. So, and I know you have coaches, Carl, and it's important to, to grow. I equate it to when you were playing hockey. You had all kinds of coaches playing hockey. So
the best. Yeah, I mean, athletes take athletes. I mean, the Olympic athletes have multiple coaches, so there's no doubt about that. And I totally agree with you, Mike. It's about action and accountability. Listen, you're not going to do it on your own, so either find partners that have experience or guides or train something, and it also boils down to accountability. It's like, I use the analogy of working out. When you have a workout partner and you don't feel like going to the gym, you go anyway because you don't want to disappoint your workout partner. You're accountable to someone beyond yourself, and that really does make a difference. So awesome.
Yeah, it does make a difference.
Have a great week. For those of you listening, put your email in the chat, and then also feel free to invite other people to this Saturday morning. We do it every Saturday morning, and feel free to help us build our network. And by our network, I mean you're part of that network.
Right, for sure.
Community.
Carl, good seeing you today. You have a great weekend, and we will catch up. Bye, everybody. Nice seeing you.